Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, everyone. Welcome to the Smartkarma Weekly Forum. The forum is a high-impact weekly live webinar that's exclusive for Smartkarma Plus subscribers. We use this session to discuss the best, highest conviction insights surfaced across the Smartkarma network. And it's a privilege to welcome you all to the session. A brief look at our disclaimer. The forum is meant purely for informational purposes. It does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers. And lastly, Chatham House Rule applies. So please do not share any of the contents on social media or any public forums without express permission. Brief look at where we left last week. We took a quick look at Arwana Citramulya, which is a small cap company in Indonesia. It also happens to be the world's 9th largest porcelain tile manufacturer. We studied why it might be an exciting way to play the real estate and infrastructure cycle that is unfolding in Indonesia. We moved fronts and explored one of the larger environmental services businesses in China. This is called China Everbright. And we took a closer look at how green finance loans are closely correlated with the strength of the business. And lastly, we explored Graphtech, which is one of the world's largest graphite manufacturers and how that is well placed this year. Moving on, this week we are going to explore 3 ideas: BFI Finance in Indonesia. Then we're going to take a look at global consumer staples as a thematic. And lastly, we will pay attention to what might be one of the unintended consequences, or perhaps an intended consequence, of the Ukraine crisis. Just a brief reminder, you can ask questions at any time. For this, use the Q&A button on your Zoom application. So let's kick things off. The first idea today is BFI Finance. The ticker is BFIN space IJ. This is a $1.3 billion market cap company. It was, in fact, one of the first few ideas we discussed on the forum last year. The stock is very well covered by Angus McIntosh, who is based in Indonesia. Let's take a closer look. So what does BFIN do? BFIN is actually the largest listed non-bank finance company in Indonesia. It provides financial services, primarily leasing, consumer finance, and factoring. In realistic terms, what it does more than anything else is it collateralizes your motorcycles and gives you cash against them. You can imagine, a farmer in Indonesia has a marriage in the family, rolls his motorbike in, leaves it, borrows some money, and comes back 3 months later to claim it back. This is one of the best run non-bank finance companies, not only in Indonesia, but actually in all of Asia. We can see that based on the high ROAs and ROEs this company consistently generates. From a timing perspective, it's at a great time in the cycle as well. Indonesia is just coming out of near recessionary conditions thanks to COVID. As a result, you're seeing a big V-shaped inflection in results. The latest reported net profit for FY21 grew 61% year on year and was 15% ahead of consensus. We must highlight here that consensus comprises of just maybe 2 or 3 analysts. This is not a name that's well covered. Next, new financing value grew 80% year on year. So clearly, there's great product market fit between what this company provides as a service and its customers. Fourth, and this is perhaps most exciting, BFI has common shareholders to Bank Jago and Gojek, which is of course now called GoTo. So for those of you who might not be familiar, Bank Jago is a digital bank that is owned by Gojek. And Gojek, or GoTo, as they're called now, is the largest tech company of Indonesia, which is soon to IPO. So the common shareholders are paving a path towards very close collaboration between BFI as well as that GoTo ecosystem. This can unleash a huge re-rating for the company. Now, ahead of this situation, there is something interesting happening that Angus talks about, and let's take a closer look at his insight. Okay, so if you scroll down and we look at the part about okay, I want to take you to, let's look for Jerry. Okay, so this is interesting. Jerry Ng, who is the most notable deal maker in Indonesian financials, he has currently announced his intention to conduct a voluntary tender offer for BFI. In fact, 57% of BFI from existing holders at 1,200 rupiah. As you can see, the share price right now is about 1285. So what this will do is any weak hands are going to sell out at 1,200. Now, why is Jerry doing this? This is not the first big financial transaction that Jerry has been involved in. He's actually led to the sale of 2 banks in Indonesia to the Japanese, and he clearly sees an opportunity to make a move here ahead of a potential collaboration with that GoTo ecosystem. So put it another way, you actually have a short-term put option. You know, worst case, you will be able to tender your stock at 1,200 rupiah to Jerry and his consortium. If not, in fact, you should be buying, because when Jerry buys, you typically buy. Lastly, as you can see, BFI is trading on about 2.2 times price to book. The nearest comparables in Asia would be names like BFI Finance in India, which trade on 8 to 9 times, or companies in Thailand that trade between 6 to 7 times price to book. So there is tremendous scope of re-rating, especially because return metrics for BFI are actually much more superior to these regional peers. Let's move on to the second idea that we're discussing today. This is a thematic piece. We're taking a closer look at global consumer staples. And as the subtitle on the slide reveals, allocations to the sector are at rock bottom at the moment. And we think that that creates an interesting opportunity. So if you look over a period of time, in fact, if you go back a whole decade, consumer staples have never been less loved than they are at the moment. One of the biggest reasons for this paring back in exposure was primarily this deep desire for growth from investors, which led to a crowding of allocations into tech companies. Now, we all know that the last 2-3 months have not been kind to those tech companies. Next, the other interesting thing is that consumer staples are also victims of high raw material prices and commodity prices. A lot of them have commodities as input costs. So it's no surprise that in an inflationary environment, that would lead to margin pressure. Now, you know, every year since 2016, this sector has also underperformed the MSCI World Index. However, we think this is an interesting opportunity. Consumer staples are starting to recover, and the gap between discretionary names and staples actually peaked in April last year. Now, with commodity prices the way they are, we would expect a poor set of results from this sector this year, but that might be a cyclical opportunity to invest in what is a staple and one of the most important sectors, especially when it comes to Asian consumption. So this is, you know, we're calling for a turning point for this entire large complex into what might be a very, very tricky set of results. And as we all know, the current commodity prices are now extremely stretched. They will act as brakes on the economy. And at the same time, with central banks around the world looking to raise rates and tighten purse strings, we actually think economies around the world are going to slow. And that is a perfect time to start looking at defensives such as global consumer staples. Moving on to the third and final idea. This is thematic as well. And we're going to take a look at what the Ukraine crisis means for the semiconductor supply chains. This is a space that's covered by Evelyn Zhang and also to a smaller extent by Douglas Kim on the platform. So I think the chart on the right-hand side is very, very interesting. That is a price chart of neon, which is one of the noble gases that is used in semiconductor lithography, i.e. it's one of the core components that is required to manufacture modern semiconductors. Now, if you'll notice, neon prices have gone up almost 6x since early October till now. And in fact, they've continued to move higher since. Why is that? 90% of American semiconductor neon supplies come from Ukraine. So that's clearly a problem. If you look at other countries like Japan and Korea, they too are largely dependent on the import of neon from countries like Ukraine for their own semiconductor factories. Now, China, interestingly, can be self-sufficient in neon gas. And in fact, this is an opportunity for China to develop its strength in the semiconductor supply chain, something that it's really trying to do. Of course, near term, this is a bonanza for neon-related companies. Most of these are in the onshore Asia market, and this is certainly a negative for some of the NAND flash memory producers as well. However, without delving too much into detail here, we notice that neon and the entire noble gas supply chain could be yet another tool used in today's modern day geopolitical saber rattling. And we will be paying a very, very close attention to this because, as we all know, semiconductor is now the lifeblood of a lot of modern equipment. And with the 5G rollout around the corner, as well as electric vehicles taking off, this supply chain becomes extremely important to a lot of countries, not just the manufacturing economies. So with that, I'll give you the opportunity to ask any last few questions, but if not, then use the platform to post discussions and the analysts can respond to them directly. All right, since we've got no more questions coming in, we're going to wrap it up for today. Just a reminder that the forum is available on our YouTube channel as well. So you can always go back and look at some of the prior discussions. Thank you very much. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.